So I'm gonna get Ikin, can you just turn off your camera first and then you can admit the rest of the people? Just gonna Hello everyone. Hi everyone. I think we have a few more people that's gonna come in. We're gonna wait for about 2 more minutes. Thank you for coming in earlier. We really appreciate that. Okay, I'm gonna admit a few more people over here. Okay. All right. Thank you everyone for joining. I think we have a few more people, but I'll just start off with the introduction first so that we don't lose time because it's a lovely evening and I do not want you to spend more than what is needed on this session. On. Okay. Okay, good evening again, everyone, and a warm welcome. And on behalf of everyone of us here in Fuller Impact, we'd like to wish everyone a happy new year. We hope you had a good break. If any one of you that didn't have that year-end break, so sorry to hear that, but I hope you are all fully recharged for the new year. So just to quickly introduce myself, Happy New Year, yes, Magdalene. My name is Bernadine. I'm from Fuller Impact, and I'll be your host and moderator for today's session. And thank you again for spending your evening with us when you could have been doing something else, and for joining this webinar. I'll start with a brief introduction to Fuller Impact and also what we do at Fuller Impact. So at Fuller Impact, we are focused on making sustainability accessible, practical, and actionable for organizations of all sizes. We support businesses through an integrated approach that brings together learning, advisory support, and digital tools through Fuller Academy, which is a brand that we are more known for, advisory consulting, and also Fuller 360, our AI-powered sustainability platform. So before we sort of start, I wanted to get the ball rolling by doing a quick poll over here. Let me quickly launch the poll first. I have two questions over here. If you could maybe help me to answer this first. Actually, this is the second question, so sorry about that. Let me launch the other questions as well. Okay, all right. We have about two people that. Okay, that's nice to know. I think majority here are using the GRI reporting standards at the moment. And then also the Bursa ones. Okay, I think we can quickly end the poll. Right. So I think majority here are still using the GRI reporting. And then of course Bursa, and lastly the IFRS. So yeah, that's good to know. That's good to know. Let me go and quickly share the results over here. Right? Okay. So let's go back to our question. So before we sort of talk about, where sustainability reporting in Malaysia is going, it's worth acknowledging where many organizations have, been coming from. Uji, can you move to the next slide, please? Yeah, right? For the past decade or so, sustainability reporting has felt like, navigating this alphabet soup. I think most of you might have encountered a lot of the alphabets over here, GRI, TCFD, SASB, CDP, IR, and so on and so forth. And it's often driven by different stakeholders asking similar but different kind of questions. So for many companies, this hasn't just been a reporting challenge for them, but it has also been a governance and also decision-making challenge. These different frameworks spoke to different kinds of audiences. Some are investors, some are the general public, and so on and so forth. And sustainability information often sat outside the core financial and risk discussion. So what was missing was a common language, one that actually connects sustainability risks and opportunities to the enterprise value, financial performance, and long-term resilience. And that sets the context for why the next phase of sustainability disclosure matters. So the introduction of IFRS S1 and S2 marked a turning point. So this was launched back in 2023. So for the first time, sustainability disclosures are being anchored within the same ecosystem that governs the financial reporting through IFRS Foundation and the ISSB. So the IFRS and S1 and S2 focus squarely on how sustainability-related risks and opportunities affects a company's financial position, performance, and also their future prospects. So in other words, sustainability is no longer a parallel discussion. It becomes part of how an organization think about risk, capital allocation, strategy, and also resilience. So this is where we start to see a stronger bridge between sustainability teams, finance, risk, and the boardroom. And globally, this shift has set the foundation for regulators and also market to move in a more coordinated direction. So Malaysia is not far away as well. Malaysia's sustainability reporting framework, the NSRF, is essentially the local translation of this global shift. So with the NSRF, sustainability reporting moves from being largely voluntary or investor-driven to becoming a structured, a phased regulatory expectation. I think a lot of you have heard of this NSRF before, and you know that their expectation for all of us, to a certain extent, all of us to start reporting on sustainability by the time it's 2030, and it's already started this year, I think last year as well. Starting with, so what's important here is not just the compliance timeline, but also what this signals. So we see that climate risk, value chain exposure, and scope 3 emissions are no longer seen as something that is nice to have, as a nice to have disclosure. They are increasingly treated as factors that can influence financial outcomes, operational resilience, and long-term competitiveness. So for many organizations, this means new conversations internally about who owns the data, governance, scenario analysis, how do you do supply engagement, and how sustainability information fits into strategic and financial decision. So while the frameworks provide reliefs and phase adoption, the direction is clear. Sustainability reporting in Malaysia is becoming more integrated, more decision useful, and more closely linked to enterprise value. So throughout today's webinar, we'll be exploring how sustainability reporting in Malaysia is entering a new phase. With the rollout of NSRF, there are growing expectations about climate-related disclosure and increasing attention on value chain and the scope 3 impacts. So reporting is not just becoming more demanding, but strategically important for organizations. So those are some of the topics that we will be exploring today. So rather than focusing on technical standards alone, it will look into how these changes mean in practice. So we have this two experts over here that will be talking about this in depth later on, and how organizations are responding on the ground, how reporting is starting to influence governance and business conversation, and where challenges tend to emerge when climate and value chain consideration come into play. So we'll do this through a few rounds of discussion, and we'll have a panel session at the end. So to ensure that today's session runs smoothly, here are a few housekeeping rules, just to make sure that there's minimal disruption. So please keep your microphone muted throughout the session to minimize the background noise. I think most of you are muted already. And if you have any questions, feel free to post them in the Q&A chat. I think you should be able to see them at the bottom of the screen. I think you can choose to be anonymous with your questions, but if you don't mind, you can actually share your name as well. And we will address them once the panel discussion has already ended. And if you have any panelists in mind for your question, you can just mention their name, and we will address those, they will address those questions accordingly. So without further ado, let me introduce our panel for today. I'm pleased to be joined by two very experienced practitioners who bring their very insightful and experience, insightful insights into this conversation. First, we have Rizaman. Rizaman is currently the head of group sustainability at Dialogue Group Berhad. He has held senior sustainability roles across organization in different sectors and brings deep experience in sustainability governance, reporting, and impact-driven initiatives in Malaysia. Welcome, Rizaman.
All right. Thank you so much for having me here tonight.
Thank you so much for joining us today. And we are also joined with Pratap. So Pratap is the principal consultant of ESG Right. He brings in extensive experience in sustainability reporting, governance, and he has also previously worked with KPMG and has supported organizations across multiple sectors on GRI-aligned reporting, impact assessment, and also capacity building. Welcome, Pratap. And
thank you, Bernadine, for inviting us here today.
thank you. Likewise. All right. So thank you both for joining us today. We're glad to have you here. So maybe we could start off the conversation, with Rizalman, because you are from the group one company, so-called, under the NSRF. Dialogue is among the first to go through this transition alongside other organizations at a similar stage. So from what you're seeing, what practical changes are emerging in how organizations are approaching sustainability reporting and internal governance, particularly around climate-related risks? And perhaps before you could actually, answer that, maybe you could enlighten us on what Group 1 actually means under the NSRF. Over to you, Rizalman.
All right. Okay. Thank you so much. Good evening, everybody. Just to get a little bit of, based on what Bernadine has explained just now, just a little bit of further introduction on that component is for public listed company, it's been split up into three different categories, like Group 1, Group 2, and Group 3. So for public listed company, we do have a calculation what we call as market capitalization. So the companies that have market capitalization more than 2 billion as of 31st December 2024 is categorized as Group 1. Right? Fortunate slash unfortunately for Dialogue, we are in the Group 1, which is kind of like looking at into Group 1 as a guinea pig for Malaysia to look at that into that particular journey of embarking on IFRS reporting. There are two components of it that I wanted everybody to understand. When we talk about sustainability report and reporting itself, IFRS also have a two separate reporting. One is IFRS accounting standard. So IFRS accounting standard where we look at it into financial performance. And we also have IFRS sustainability standard that we look at it into non-financial performance. It's quite similar to any company. I mean, as basic as it, allow me to explain that in the most easiest term. Any company, regardless the size and the dimension of that company, regardless any industry, we always talk about the fundamentals of the company. Means that it's end of the year, we talk about how much revenue, how much dividend, how much income do I get, what is my EBITDA, and things like that. That's what we call as financial performance. We also have another component of it, that the component is actually what we call as non-financial component. So if you have like a 1 billion company, but how are you actually performing in terms of non-financial? Do you have bribery cases? Do you have sexual harassment cases? Do you have all of these that we call as non-financial performance, right? So in IFRS and traditionally, conventionally, how we address sustainability is being addressed separately. I mean, look at it into, okay, financial is one part and then non-financial as another part. But IFRS requirement now, we need to think it differently as well. So it's not only addressing the upgrade component of how we write non-financial performance report, but how does that non-financial impacting us financially in a company? So based on that, the way that we think about sustainability is no longer about, okay, we need to look at that into our energy, I will look at that into our safety and health, look at into diversity, biodiversity, and things like that stand alone. But we also need to think about how does that affecting my cash flow, affecting my revenue, affecting my OPEX, affecting my CapEx. So that's a little bit upgrade in a sense. So it's not only just upgrading the way that we do report, normally in terms of sustainability, but we also need to have to establish a bridge between those items. Right. So to answer your question just now, we are about 100 companies in Group 1 company. So we actually meet regularly as well in Bursa, where we talk about what is our challenges, what are our approaches, how we can actually address this thing. And there a lot of sentiment out there among the Group 1 companies. Actually, the trend is, number one, is the complexity of it. Because it's not only just reporting, and it's not only affecting us as the head of sustainability for all these public listed company, but it's also affecting how the organization going to respond of it, organization entirely. Looking at into how the board has to understand what is non-financial performance of us and how is it affecting our financial performance. How are we addressing sustainability related risk and opportunity? And addressing that to that level of give it a proper governance and reflecting that. But it's also to have a different put in a different approach, means that either what is the main agenda and driving how. Right? There are a couple of school of thought. There are some public listed company just focusing on compliance matter. But a lot of them actually shifting toward the first school of thought, which is we want to look at that into how does sustainability related risk and opportunity is embedded to our overall ERM, enterprise risk management, as well as driving that into a decision making framework itself. Right. So that's the component that we are seeing the changes. Right. So this organization changing different way means that it's not only maturing our way of doing it in terms of the departmental work, which is the sustainability group or communication department or whatnot, but it's also in changing the whole organization. How are we behaving? But as I mentioned just now, since Group 1 is also can be considered as a guinea pig for Malaysia, a lot of lesson that we learn throughout. I mean, when we meet up together, we kind of like understand how are they actually doing it, how are they pushing it, how what kind of thing that they wanted to do, and some of it already employed at quite advanced. Some of it, okay, let's take step by step. More of a looking at into more understanding and taking the step together as organization. So there's a lot of things, but everybody showing a great maturity and everybody actually taking the step ahead. So that would be my first part.
Sorry, I was muted just now. Yeah. So I was mentioning just now. I like how you mentioned earlier, like how there is a peer support group for the Group 1 companies. I think that is quite needed as well, because considering how this is our first year to sort of embark on that, IFRS reporting as well. So then for you, right, Rizalman, if you could, sort of summarize, like what are the lessons that that you can share together with, us over here, and also people that are gonna embark in the IFRS reporting, especially Group 2, which is supposed to start this year. What would be the most relevant lessons that you think for companies that are entering, on the later phase, that they can use in order to start off their IFRS reporting?
I think number one would be having the right mindset. A
Okay.
lot of stuff when we hear a lot of people actually putting in when we met with a lot of consultants, when we met with a lot of stakeholders, it's kind of like, okay, try to make sense of it. Every thing that we hear and whatnot, kind of like sometimes it kind of like, oh, I'm so afraid of doing this. I mean, I cannot do this alone, and things will come to you like a very big bus load come up ahead of. of you. So we need to be able to manage that. The number one lesson learned that I get is actually enhancing your capacity and capability. Really need to understand what you can do. And another part is actually, I like this keyword. I mean, I've been mentioning it a lot throughout my engagement, is the word balance. Keep it a balanced approach. I mean, of course, as good as what it is for sustainability that we wanted to go ahead on what part, the business has to survive as well. If we put it in too much emphasis that, okay, we want to do this, want to do that, but at the end of the day, the business is struggling to even get into that healthy cash flow, it also cannot do that, right? So we need to have a balanced approach and how is it actually reflecting. But number three lesson learned is understanding your big why. Why are we actually pursuing this matter? Right? Need to really understand this journey that you need to take is for what reason, what intended purpose that you wanted to have, and what are the things that you want to look at it into. And my number four is okay. A lot of people that we have been dealing with this like myself. I've been in 13 years in corporate sustainability. The thing that I learned is always about it's okay, because sustainability and corporate sustainability and ESG is a journey. It's okay to mess up. I mean, you're going to mess up a lot in terms of data not complete, in terms of computation, salah, a wrong emission factor that we employ and things like that. So I think it's okay to make that mistake, and it's okay to admit it. And it's okay as well to learn from it. So that's my four lesson learned on that.
Nice. So capacity building, clarity, it's okay, and then also another one is
Balance.
take a balance, right? I
Yeah.
think that's a good message to to us, all of us out here.
Mm.
Okay, Pratap, let's move on to you. So with the growing, focus on investor oriented and climate related disclosure, so how are organization, from your, experience and also from your engagement with your clients, are actually continuing to use GRI in a meaningful way today? And we also know that GRI very much is, complementing IFRS when it comes to sustainability disclosure as well.
Yeah. Thank you, Bernadette, for the question. And Rizal, nice to hear how you articulated your points on IFRS and investor focus reporting and so on. Before I answer your question, Bernadette, I quite like when you did the poll just now, and then the results was that majority of the respondents were reported to be using GRI and then IFRS and then Bursa requirements. I like what you said, that majority of them are still using GRI. So as if using GRI is something that's backward or primitive. I think it's just maybe just not what you meant. I'm
No,
sure.
no, I know it's not what I meant.
But
But yeah.
yeah, but to answer your question, the majority globally, worldwide as well, majority of companies use GRI because it's been around since 1997. So it's maybe it's a granddad of various other sustainability related standards and the frameworks that you showed just now, the alphabet soup. GRI is here, and when IFRS came in 2023, and then the NSRF last year, and so on. Many of the quips that I get from the people that we interact with and our clients and all, many of them say this: "Oh, I hear that GRI is on the way out, and IFRS will now take over, and everybody is going to follow IFRS." And I think nothing can be further from the truth from that. Granted that I must say we are a certified training partner of GRI, and we have also done trainings on ISSB, IFRS S1, and so on. What we're trying to say is that I think it's a misunderstanding when someone says that we are trying to pit as if it's GRI versus IFRS. It's not about competition. As you showed in the slide just now, GRI complements IFRS because there are two different perspectives over here. One is looking at impact reporting, and the other is looking at sustainability-related financial disclosures. So that is investor-focused reporting. So they both work together. And so if you're looking at IFRS, it is an outside-in approach. And how does the company actually produce financial results for and value to its shareholders. So that is investor focus. Who is invested in the company and whether the company can maintain its financial results and produce value to its shareholders. And GRI, on the other hand, it's an inside-out approach. What kind of impact the company has on the world outside, on the environment, on human rights, on communities, and so on. So we need both of these together to be working together. So it's not as if it's a competition between GRI versus IFRS or anything else. Because if it is a competition, then and IFRS is going to be the sole standard that's going to be used, what then happens to the UN SDGs? What then happens to human rights? So there are various other commitments that the governments, not only Malaysian government, various other governments will also have to contribute to, because we do have our nationally determined contributions to the Paris Agreement. So we need to contribute to UN SDGs as well. So here's where there needs to be proper understanding on, as what Rizal said just now, why we are doing this in the first place. Are we doing this because it's a box-ticking exercise for compliance purposes? Are we doing this so that we can keep the regulators off at bay, so they don't come and point out to us what we are doing wrong? Or is it just a mechanical and legalistic exercise, which is meaningless at the end of the day? Because we all know, we've seen and read many sustainability reports. Everything is beautiful. It's wonderful. It's just blue skies and birds chirping in the air and so on. Everything is happening very well. If things are going really well, why then is the world in such a difficult situation? Climate change is a real problem. There is challenges in terms of human rights, matters related to diversity, and then issues related to corruption, matters related to how you deal with waste, and so on, is still an issue that we all have to deal with for many years to come. And so here's the way I see it. Organizations will still use GRI. They will report using UN SDGs, and they will also report using various other sector-specific standards as well, like IPCA for the oil and gas and so on. And they will continue to do scenario analysis on climate change as well for reporting purposes. So they all will help. Ultimately, I think it will probably come down to using GRI, IFRS, UN SDGs, and maybe one or two other frameworks as well, which will help companies to articulate what they are doing in terms of their initiative, actions, and impacts on sustainability reporting.
Thank you, Pratap. I think that creates a great segue for my next question as well. You mentioned just now, like, there are a lot of people, and I think still until now there are a lot of people that treats sustainability reporting as a barrier for, or not a barrier, but more of a compliance exercise, a checkbox exercise, which is not wrong. It's a good starting point, I would say. But just to get into that particular just that scene on using, how can we use sustainability reporting as a strategic tool within the business, right? So Pratap, drawing from your many years of experience doing sustainability reporting, consulting, and training, how does the use of sustainability reporting insight differ between organizations that treat reporting as a compliance exercise versus those that see it as a management tool? Do you see any difference in the way how they operate in business, and how they look at things and how they address certain things?
Great question, Bernadette. Here's where I think there is various categories of companies in how they do sustainability reporting. It all comes down to two aspects. Number one, the maturity of the organization in terms of sustainability. And secondly, the involvement of the board themselves, because the board sets the direction and they set the tone in terms of sustainability governance. And here's where I think there is some kind of various forces that impact the organization in terms of sustainability reporting. The maturity of the organization will have some kind of influence in terms of what kind of resources that the company has and can spend in terms of improving on their sustainability performance. And then they also would determine why we are doing this and so on. And from the governance perspective, the board needs to get involved because they have to set the tone from the top. And that comes from the Malaysian Code on Corporate Governance by the Security Commission as well. The board needs to get involved right from the start. And here's where I think a lot of companies, they have different approaches. The more mature companies, the board are very involved right from the beginning. The companies that maturity is just somewhere in the intermediate level and so on, they have a mixture of the senior management and the board getting involved. And various other organizations who view it as, like what you said just now, compliance purposes, a box ticking exercise, they leave it, the entire sustainable reporting and the burden of reporting falls on the shoulders of maybe one mid-level officer in the organization who is tasked with doing the sustainable report. And believe me, even today, I had a discussion in one organization. It's a huge organization, but they have only 2 people doing the sustainable report, one mid-level senior and another executive. And the rest of the organization, their approach is that as long as the sustainable reporting is done, that's okay. So they have ticked the boxes and we achieve sustainable reporting. But they fail to recognize that I think the task should and the burden of responsibility comes to the board of directors. The directors need to be involved right from the start. If you don't get your sustainability governance right, you will not have the right direction in how the organization approach would be marked in terms of its initiatives, with its vision and the mission, and what it wants to communicate to its shareholders. So you will get off the wrong start if you don't get your sustainability report governance correct.
Right. I think that's a good point. I think, I like the notion of, we know that, it needs to start from the top, but there tends to be, a few ways how certain, sustainability approach in organizations. Some are, if they're lucky enough, it's a top-down approach, but it's not like unlucky lah, but like, a lot of people, it's like a bottom up. It's like something that needs to be escalated, and it's a bit more effort that they need to do in order to get, the board or even the management to agree on certain, sustainability decision. So from your experience, right, in order for company to shift to that mindset of, more of the notion needs to come from the top, what tends to be the tipping point that helps organization to make that kind of shift? Sorry, Pata, I think you're muted.
Oh, sorry.
Yeah.
Thanks. A good, fantastic question there. Again, it comes back, again, as I mentioned just now, to the role of the board, specifically the chairman. In Malaysia and mostly in Asia, most enterprises are family run. And so the influence of the family on the board of directors is quite heavy. And so the founder or the chairman would always be the owner and the family-run enterprise. Their commitment and dedication towards sustainability becomes tremendously important. And I've seen that in companies who are very, very resourceful and large, and they are highly capitalized on Bursa Malaysia. I've seen companies who are very mature, even though they are family run as well, but the chairman and the board of directors are very mature and they're very dedicated in terms of sustainability reporting. And yet I've also seen multi-billion-dollar enterprises listed on Bursa Malaysia. All they do is they just want to meet the minimum compliance requirements as well to do so. So the tipping point actually comes back to whether the person who's leading the board understands what sustainable reporting is all about, and whether they are seriously committed to be making an impact on the world around us for purposes of planet and prosperity and also peace on earth. So if they are not committed, the entire exercise will become just another boilerplate statement. And in fact, it becomes very mechanical exercise from year after year. You'll be very surprised. We have also seen some listed companies that sustainable report from one year to another year. There's a lot of cut and paste jobs going on. So they, from one year to another, they just copy some portions of it and it's just repeated in the following year. And this happens quite often, unfortunately, in the Malaysian scenario.
Yeah, thank you for that. I think that I think totally resonate on that, like the importance of setting that tone. Rizaman, maybe I can, go back to you and just from your experience as well. I think Pratap has shared like an amazing experience on his experience working with companies on how distinct it is from companies that when the notion comes or the mandate comes from the top and when it comes from the bottom, right? So then, from your perspective, right, Rizama, and from what you're seeing, how much are sustainability and climate related disclosure actually influencing board level decision and management decisions today, particularly around the risk management and also strategy?
Thank you so much. It's really interesting conversation that Parab has been mentioned just now. Just a little bit of information here, Parab. My company, there's only one person in sustainability, group sustainability, which is only myself. We work very lean in a way that a lot of people from other department actually chip in to help, because the main role that I'm looking at into more facilitation and consultation internally. But the really interesting part of that about that conversation is I'm also helping a lot of board members in where we work with group sustainability, which have about 80 people. And we also work with a public listed company that doesn't have at all a sustainability team, right? So in a way, that how that maturity look like and how that actually translated into decision making, there are two components of it. One is actually either it's been practiced and it's been embedded internally in terms of sustainability been embedded in a way that translated into decision making, or it could be just in terms of disclosure perspective. I mean, for anyone that actually watching, when I mentioned about disclosure means that what we write in the report. There's two part of the report, right? So one is actually the narrative component of it. So that the story, what are kind of thing that you're putting in, what kind of thought processes that you employ. Another part, which is the performance level, which is the performance itself. How much energy that you have, what kind of water you have, kind of that kind of part, disclosure that we get into. So in terms of board level decision, when I have attending a lot of my board meeting, I mean, I attend not only Dialogue Global Hub board meeting, I also attended several other public listed company board meeting. The discussion is always about where you want to go, and then how does that actually influence. I mean, to one extent, that although sustainability is really important, but at the end of the day, what is the significant level of each individual sustainability related matters to the decision that we're going to take today. I mean, a lot of time when we talk about at the board level, there are two things. Either you want to disclose or you just want to keep it as a practice, right? So in a way that, okay, and we are only practicing this, but we are not going to disclose it. I mean, in a way, I can give you an example. If I'm going to, I have a factory, maybe in KL or in BJ, right? That factory cost me about 1 billion to build. And if I want to put under IFRS requirement, is that I need to put what is my potential loss if there is banjir. I mean, if we look at into flood in that particular factory, how much is going to loss to us? It's a 1 billion thing. The sentiment out there is, if I disclose that kind of information, will my investor run away? Or that is something that my investor wants to see to begin with? I think it's quite similar when we have one of our IPCA, I mean, we are oil and gas, one of IPCA disclosure is they want us to disclose what is your fine, kena saman berapa. I mean, regardless, I mean, in Dialogue, we are a 3 billion company. Saman, for us, saman would be, what, 10,000, 20,000? As a 3 billion company, kind of like very easy to pay. But to me, regardless about the amount and the amount, and also whatever it is on the summit, it has to be disclosed to begin with. Our investor has the right to know if we have any problem in terms of compliance, regulatory compliance matter, right? So we need to be able to shape it. And I totally agree with Pratap's statement just now. Is yes, it has to be driven by the management, but it also goes to what is your definition of management. I mean, I'm the head of department of myself, right? So at a certain extent, I also have an influence what I need to bring to the board, and board will give me what kind of wisdom that they are thinking, what kind of direction that they are looking at it to, and how significant it is. I mean, if I can bring a more relevant the point in that particular board meeting, they will actually understand more, because sometimes when they make decision or they make trying to make something, it's not because of they intentionally want to ignore it, but because they are not aware what is actually the significant impact of it, how is it really important, and what is actually related to it. So, I mean, in terms of risk management, uh, in very less matured company, risk management is only tick a box exercise. At least you have the risk map, got red, got orange, got green, and that's it. But we need to be able to translate that into a more structured decision-making framework. Yeah, that's my yeah. Are you muted? Benedict, you're muted.
So you were saying to translate all this information. The firstly, what you mentioned was to take a balanced approach, to be transparent with your board on, the positive things you need to report, and also the negative things also you need to report, so that they know the full context of the situation in the company, and then how can you translate all this information together with the ESG impacts and also risks into a framework. That's what you mentioned earlier, right?
Yes, I totally agree, and that's what I mentioned as well. And the main point just now is not necessarily about disclosure. My aim in dialogue itself is to make sure it's been implemented. Either you
Right.
disclose or not put it in the report. That's a number two story. Number one, it has to be embedded and it has to be institutionalized, and put it in your DNA in terms of when we make a decision. We need to consider all of these factors, both financial and non-financial aspect of it.
Right. So to see it through, right? So it's not
Yeah,
just reporting it, but also doing it.
yeah,
I mean, you're supposed to report something that you're actually doing,
yeah.
in the first place, right? So yeah, to see it through. So we've talked about that, the strategy and also decision making. Let's turn to an area where a lot of organization actually feel, complexity, which is the value chain, disclosure. So internally embedding it is it's hard enough. What more, getting your value chain to come on board, because you do need certain information from your value chain in order for you to complete, not just complete your report, but also to make sure that you are looking holistically on the impact that you're doing, that you have. It's not just within your company, but also outside of the company. So um Rizaman, going back to you, right? As organization are actually expected to disclose more about their value chain, from climate impacts, to broader sustainability risks. So how are they, from your experience, especially in the group one people, how are they actually approaching this transition in practice?
With high reluctant, actually, I can put it that way. I mean, as easy as that, because for group one, we have to start to disclose. I mean, mandatorily will be 2028 onward, 2027 onward. We have to be a mandatory disclosure on that part. To me, like I'm a very practical person. Either bringing in everybody in the supply chain, we already complete our map out, the whole supply chain, how it look like for us as well. I mean, even for Petronas. For Dialog Global Hub, we have about 4,000 plus vendors and suppliers, both upstream and also downstream of things. Right? In that sense, we are operating in 8 countries. To make sure that everybody comply and everybody report is a very big exercise on its own. And either you want to embed that as a requirement for us to make a decision. It's a very big challenge and a very big question mark. Even one of our client, one of the bigger client, multinational as well, their plan to make sure everybody comply and embedded as part of contractual obligation under contract. Under contract, they're going to put that information, you have to comply, you have to disclose your greenhouse gases and whatnot. It's 2030. But the expectation for us to start disclosing and to start implementing this is by 2027. So it seemed like what I mentioned just now in our lesson learned. It is okay. Not everybody is expected you to take on that journey to the whole supply chain itself. So you have to choose which one is more significant. I mean, as easy as this. If we have a makcik nasi lemak tepi jalan, do they need to comply with ESG framework? I mean, what kind of ESG framework that they need to have? And that particular small vendors, and then for us, that's why we work with 70% of our suppliers, MSMEs, right? So the mom and pop hardware store, do they need to comply with the stringent requirement of sustainability? So that's something that we need to ask ourselves. What is the whole purpose of this exercise? It goes back to your intention of engaging with our supply chain. I mean, for us, I want to move the whole ecosystem. Moving the whole ecosystem is a journey. We cannot say that, oh, I need to take one shot, 1 year, and 4,000 of our vendors going to have a certain level of maturity in terms of sustainability. So we want to make sure this part going up. So we are working with a lot of, I mean, we are splitting our supplier into several groups at this moment. So which one is more matured? We do a little bit of maturity to pulse check to them, what kind of thing that you have and what are the mandatory requirements? Because some of the sustainability requirement is already a mandatory requirement. For example, you have ABC policy, anti-bribery and corruption policy. Most of them already have that. A lot of SMEs already have that kind of policy in place in terms of safety and health for us as oil and gas company. So that's something that we need to look at firming up their fundamental component, then we scale up to more interesting component of it. Okay, one of the thing that we always check is your energy, right? So in terms of calculating the whole scope 1 and scope 2 and scope 3 of that particular supplier might be a challenge, but we start first, right? Okay, let's look at into your energy. And for us, and we have vendors that in Australia, in New Zealand, that's a challenge itself because they are not in the same region as we are. And some of them actually electricity bill come every 3 months. That recently I just found out as well. The electricity is only 3 months. So kind of like, okay, how can I reach that part? So yeah, so the approach is one is actually first understand this is a journey, take a step, because if we put in too much expectation, we'll get frustrated ourselves.
I see, I see. Okay,
Yeah.
so just to sort of sum up your point just now, I think the first thing that you mentioned was to understand why you're actually doing this. And then the second thing that you actually mentioned is taking more of a phase approach, looking at, maturity of company. And you also talked about, let's look into the fundamental things that needs to be that can be addressed first, and then looking beyond those fundamental aspects, right? And also you did mention about because you do have vendors in Australia, you mentioned. So then you also need to understand, context as well. So all this sum together, this is how currently you are actually doing, approaching your value chain, engaging with your value chain in order to transition together. Because again, like you said, sustainability is a journey that ideally it has to be taken not standalone, but together with everyone, so that everyone can move together, forward. Because it's not about going, faster alone, but it's about, going together and then reaching that destination together, right? So Pratap, right? Just from your experience, with supporting organization with their GRI reporting. So where does, GRI add the most value when it comes into helping companies understanding their impact across the value chain?
Yeah, thanks, Bernadine. I just want to say thank you to Rizalman. He has actually sort of like provided some answers to his question that you asked. If you all have listened to what Rizalman shared, he's talking about balanced reporting. A number of times he mentioned it. So there are two areas that GRI actually helps companies to look at. Is number one is the matter of balanced reporting, and the other is looking at sustainability governance. So from the perspective of balance reporting, GRI, right from the start, always have been emphasizing that companies should be undertaking balance reporting from the perspective of reporting your positive impact and your negative impact. But if you read any assessment report, you will find it very difficult to identify negative impact. Page after page after page in assessment report is all about all the positive impacts the company is contributing towards assessment reporting, and to the environment, to the society, to governance, communities, and so on. So sometimes you wonder, where are the negative impacts? Because there obviously are negative impacts: the usage of water, usage of electricity, waste from the organization as well, and impact on human rights, impact on community, on biodiversity. It's all there. So here's where I think GRI helps in continuously emphasizing that you have to address both positive and negative impact, which leads to balanced reporting. And of course, this will not sort of strike a chord with the board of directors or the senior management, because they will say, hey, Joe, why are you writing about this negative impact? Our shareholders will not like it. And I don't want the regulators to issue us a summon or take action against us. But here's the thing, yeah. Every organization has negative impact. There is no organization that's perfect that does not have any kind of a negative impact. There is negative impact on every organization. But the reason we are doing this assessment reporting is that we want to communicate to the users of the information what the organization is doing to reduce the negative impact. That is the purpose of all this. And that defines whether the organization is mature and it knows where it's headed to. For instance, if there is a lot of accidents or rather injuries within the organization should not just sweep it under the carpet, but rather just say, what actions have you taken to reduce potential injuries or fatalities within the organization? That's the basis of assessment report. The basis of assessment report is transparency. You don't hide it under the carpet and don't say anything about it. Just say, oh, we got 3 injuries this year, we got 5 injuries this year, or we got 0 fatalities this year. But all this information are just data and statistics, but it doesn't communicate anything. But it should make some meaningful disclosures saying we have taken these steps so that our employees and also the communities are not hurt in any way. The second part which GRI assists in assessment report is to making sure you got to start, as I said, sustainability governance starts with the board. You always have to look at it from the organizational context. What kind of organization are you? Where are you operating? Are you operating domestically? Are you operating in the region? Are you primarily an exporter? Or are you a regulator or a government agency or ministry? And this is very important. Without understanding the organizational context, you would not know where is the starting block for assessment reporting. I had one government regulator who's our client, and they told us that actually they will be transitioning from GRI into ISSV because that's what the Securities Commission requires, and everybody is following ISSB and so on. But I went back and I told them that, hey, but you are not a listed entity. You're not a listed issuer. So you're not bound by Security Commission's regulations, but you are a government regulator. Your primary role is to make sure that your constituents, which is the people, are not negatively impacted. So you want to make sure the environment is not impacted, the rivers are safe for biodiversity, the parks are good, and so on, and the companies are not dumping their waste in the wrong places, and so on. So your primary thing is basically to look at impact reporting. So as a regulator, why are you looking into IFRS, which is an investor-focused approaching? So this is where there's a lot of misunderstanding on what IFRS does and what is the purpose of GRI. So here's where I think GRI also contributes by communicating the fact that you need to start with the board by having a clear vision and purpose, understanding the organizational context for a balanced reporting.
Thank you, Pratap. I think that's a that's the good insight. Again, I think we emphasize, I think, a lot throughout this conversation just now about balanced reporting, and you also mentioned something on following it through, which resonated with what Rizaman mentioned earlier as well. It's not something that you report something that you don't do, but you need to report something that you will do, and also what you will do about the things that didn't actually go well, right? So, and then you also talk about the governance of sustainability, which is very much important. I think you mentioned, and also even Rizaman mentioned, there are certain organization which only has maybe 1% or 2% that is governing a huge organization with only like two sustainability execs, or managers that are overlooking the entire company sustainability. So I like when you said there needs to be certain alignment and also vision from the top. I think that has been the notion that have been set, I think, since the beginning of our conversation today. So thank you for that. We are running out of time, but I want to just slot in the last question, I think, which is something that has been in a lot of people's mind as well, especially with all the transition, and I think people are also trying to navigate through it, which is the interoperability of different kinds of sustainability reports. So I will throw this question to both of you, right? So we know that a lot of organization, they actually feel overwhelmed by the multiple reporting requirements. So how should GRI and IFRS align climate disclosure and also Bursa expectation be approached in a complementary way rather than a separate reporting exercise? Perhaps I think maybe Pratap or Rizaman, you want to go first?
Let's start up do that first.
Oh,
Okay.
I wanted Tai Chi to Rizalman first, but
I can. I'm not.
You want to go first?
Yeah, it's okay. I mean, you can take that first. Then I can
Okay.
also answer this.
Okay, from my perspective, again, it all depends on the organizational context. If you're a listed issuer, you have to follow the regulators' requirements. You just remember that the regulators, via the NSRF, the National Assessment Reporting Framework, has come out and stated very clearly that the IFRS is a baseline reporting standard. And that's very important because, and a lot of people miss that is called a baseline reporting standard, meaning at the very minimum, you got to start with IFRS S1, S2. That doesn't mean you cannot use any other frameworks or standards for reporting purposes. So what you use, other frameworks and standards, it all depends on your organizational context. Say, for instance, if you are an exporter and if you are exporting to the European Union, you have to comply with standards that has been outlined by the Europeans. For instance, the European Assessment Reporting Standard, ESRS. Never mind that it's gone through a lot of change and simplification exercise with the Omnibus Simplification Package, but it still is a standard that applies to companies under its jurisdiction and so on. So if you are a regional player, again, it comes back to where you are active in. If you are active in Malaysia, Singapore, so you got to follow the respective jurisdictional regulations as well. So it's actually a mixture. So again, as I started this by saying, it's not a competition between IFRS and GRI. Nor is it with SDGs or IPCA or any other standards. You got to look at it from your organizational context. What you're doing, which sector you're operating in, and what is it that you want to communicate to your shareholders.
I totally agree on that part. Allow me to add on that. Number one is actually you need to understand where your pressure point. I call that, even though you mentioned about the word organization contact, I put it, where is your pressure point? I mean, if you're a public listed company, so a lot of time your pressure point come from only two, right? Either from Bursa Malaysia as well as for a Securities Commission. So that's a two pressure point for you, right? There's only three pressure point. Number one is actually from the regulator side. Number two is actually from the financial side. For the financial side, if, for example, you look at into taking up a loan, or you have institutional investor that coming up, they also have their own requirement. Like for us, EPF is one of our institutional investor, and EPF has their own requirement. Okay, if you want to get my money, I can invest to you this much amount of money, but you need to comply with certain requirement. Right? So that is actually number two. For example, you can also look at that into international bank or bank. You want to take up a loan, and then they have to do some exercise as well. And that's what the requirement from the bank, right? The bank, in order to take up that loan, that they have to think that, okay, you need to provide me all this information, right? So that is your second pressure point. Your third pressure point comes from supply chain. I mean, for example, like for us, we've been doing business with Shell, with Petronas, with the like of Petronas, Schlumberger, Baker Hughes. All of them have a different set of requirement what they want to have. Hence, it's not a thing that you need to consolidate everybody and to see, end of the day, what are the things that I need to comply on? What are the things that I need to follow? Right? Rather than subjected or subjected yourself toward a certain, like, taksub dengan one particular framework, you have to be agile enough to understand multiple framework. Or it's not even framework, requirement by all other parties as well. Because we only want to produce one report. If not, it's going to be a very hectic exercise. Oh, your new client coming in, another report, because there's different requirement from what we have. Right? So you need to be able to strategically align yourself, not only for IFRS, but also for other requirement that's coming in, right? Which is GRI, some of it I'm asking about, oh, do I need to follow from GRI and whatnot? Yeah, that's my thought on that.
Okay, so I think just to summarize the points again,
Yeah,
one is also context is king, I think, in this conversation,
yeah,
understanding your context. And when we talk about context and also pressure point in that sense, it's looking into why are you reporting it, who are you reporting it to,
yeah,
and then what exactly are the information that is actually needed
yeah,
in order for us to actually you know interoperate between all this what do you call that, reporting standard. Because like you say, it's not about producing 5 6 reports, but it's about one report that can actually address different kinds of reporting frameworks and also standards, right? So I think that that brings us to the end of the panel session. I know we are a bit over time, but I think we have a few questions in the Q&A. I think the chat, I think. Let me quickly go through that, if it just so that we can actually address that. Maybe I think the first one that came out, I think there's a few. Okay, the first one is from Dura. I have a question to Mr. Pratap. How can companies evaluate which sustainability frameworks are best fit for them?
Yeah, thanks, Dura, for the question. But I suppose we have answered that question already. Number one, we got to start with the organizational context. Whether you are a standalone company, whether you are a mom and pop company, whether you are an SME, and where are you operating? How many subsidiaries that you have? Do you operate in Malaysia, outside Malaysia? Do you export? Are you a regulator? Are you a government agency? The organizational context matters in terms of deciding which framework or standard to use. So if you're a listed company, number one, you certainly need to use IFRS because that's required. And you certainly do not want to miss the UN SDGs. Because that's very important, this contribution from a national perspective as well. And you certainly do not want to sideline GRI as well, because it's talking about impact and what you are doing, and most companies have already been using it, and you can continue with that. And then you can look into your sector-specific standard as well. I mean, if you're an oil and gas, or if you are a plantation company, you might want to look at what RSPO or other standards and all frameworks that are used as well to guide companies and so on. So you got to look into your organizational context in terms of deciding which standard or framework to use.
Yeah. Thank you so much, Pratap. I think yeah, like you said, we've sort of answered that throughout the session just now. Azrin, you have a question for Izaman. What are the biggest hurdles companies face aligning themselves with local and international standards? Yeah.
Yes, thank you, Azrin, so much for that question. I would like to answer this a very practical way. Number one is actually to get people to be on board. I think it's not only about just about the data, about the understanding and part, but to get people on board, right? A lot of people when we started the health and safety program, I mean, 20 years ago we started about HSE, right? So people always thought it's not my job, it's your job. So, and then they always think about initially when we started sustainability journey, 7 years ago, corporate sustainability journey. So, and people always thought about, this is another workload, right? So managing people is really, really important. The hurdle there to get people on board with you, because the role of corporate sustainability practitioner is if we are not the one who collect data, we are not the one who going to implement it. It goes to all those support function, HR, risk management, and whatnot. They need to be on board with us to go in the same journey. That's my point. Yeah.
Hey, thank you, Rizalman. We have one last question from Niran Niraj. From your perspective, how do you see the sustainability and ESG landscape evolving over the next 20 to 30 years? Well, this one is a tough question. Um, I hope both of you have your crystal ball over here. And specifically for fresh grads who wants to build a career in sustainability and ESG, how relevant do you think this field will be in the long term? And this is to any panelist. So any, take ups from, Rizaman or even Pratap, feel free, or you both want to, chime in. Few things that I'm okay with that. Yeah.
Yes, I think since just now Pata already answered that question, so allow me to answer this question. I think myself, I work in the corporate sustainability, while Pratap is on the consulting perspective. Right? So allow me to shed some light in terms of corporate sustainability. I think sustainability are here to stay, but to which extent, to which context, 20 years is not something that I can predict. But again, as I mentioned early on, any company or any corporation is always about finding the right balance between financial performance and non-financial performance. And ESG is covering bigger chunk of non-financial performance, right? So it will here to stay. I mean, regardless how big it is, financially, it's also tied back to non-financial perspective, right? So it will stay. And then we look at it into the trend of human capital at the moment, right? So a lot of people, I mean, to answer your question, we need to put it two different perspectives. One is a corporate sustainability perspective. Another one will be the vertical component of it, like green building, mechanical engineer that have sustainability, LCA and whatnot. So another part will be the one who do the report. Then a lot more company, right? So with the love letter coming from Securities Commission saying that it has to be embedded internally and if possible to have a specific officer or specific department to address sustainability within the company. So yeah, I mean for public listed company is here to stay. And then we can see the shift toward from public listed company to non-public listed company as well. So again, yeah, it is something that you can work on. And if you are a student, equip yourself. Because of what I'm saying, this for students, there's no specific course for corporate sustainability. Because ESG itself is too big, environment, social, and governance, right? So there's no specific course to learn all three together, right? But equip yourself to what are the requirement is, or you understand better how the structure look like. Because you can come, I mean, I studied actuarial science back then, but I'm here looking at it to sustainability. Yeah.
Okay, thank you, Rizalman. Pratap, anything to add on?
Yeah, thank you, Rizal, for that. I agree totally that sustainability report, or rather landscape, is here to stay. Yeah, I would just say that maybe a little bit of advice is maybe don't listen to Donald Trump on this aspect of sustainability reporting. Climate change is real, and impact on the environment is real. I mean, if you look at Brundtland Commission's definition, the sustainable reporting is not just for us, it's also for future generations so that they can also continue to thrive and live as well. So it's not just about us. So if you talk about 20 to 30 years, maybe you can just picture a world, maybe people will struggle to have access to water because a lot of water under the ground has already been extracted by the mineral water companies. I'm just saying, I'm not saying the mineral water companies are the culprits. I'm not saying that. So please don't mistake me. I'm just giving a scenario. What if there are not enough trees as well, because a lot of the land has been cleared for purposes of development, building houses, factories, and so on. And what if all this development has caused more floods and so on in the region? And so sustainability reporting will be here to stay. It impacts all of us, it affects all of us, and we all have a role to play in wanting to make the world a better place. At least the little thing that we can do is that maybe we can help from the Malayan tigers from becoming extinct. We can help the seladang, which is unique to Malaysia as well, from becoming extinct, because the children in the future will probably not be able to see any of those animals if the trajectory continues the way it is. So if you are thinking of a career in sustainable reporting, you have made a right choice. In fact, that will be something that you can do to contribute to this world as well, to get companies to focus not just on making money. Making money is important, and that's the purpose that companies exist. But the journey towards making money has to be done in a responsible and ethical way. Without looking at the bottom line, you have no reason to exist, because making money is significantly very, very important for companies. But let's go on the journey in a responsible and ethical way.
Right. Thank you, Pratap, and thank you everyone for tuning in. Unfortunately, we don't really have time. We actually exceeded time, so sorry for that. But if you have more questions, we are more than happy to answer them. What we'll do is that you can actually email us at impact@thefluoracademy.com, or learn at thefluoracademy.com, and then we can address your question. And then we'll get back to you on that question once the speakers has gotten back to us on that. So then, just to sort of wrap up like some of the conversation that we have today, right? I think the conversation, I think that one of the main thing that we spoke about today is understanding your why and your context. And when it comes into your context, it's not just understanding what internally your situation or your maturity or your readiness is towards sustainability, but also understanding externally what are your impacts, not just to your stakeholders, but also to the environment that you operate in, right? So essentially, it's like keeping your house and your taman in order in that sense, right? And also to look into, when you look into sustainability, the first thing is always to look into sustainability governance as well, to ensure that everyone is aligned, not just people from the top, but also people at the bottom as well, and also to take a phased approach towards thing. It's not about getting there just in order just to tick off all the boxes. You're just doing it for that purpose, but instead need to do it a bit more meaningfully, that contributes to your company's sustainable journey. Right. So with that, right, I just wanted to do a quick shout out to the sessions that we are gonna have in the future if you enjoy these kind of sessions. So Pratap and also Rizaman are actually two of our speakers for our upcoming Sustainability Reporting Week. We have two other instructors who couldn't make it today. So this Sustainability Reporting Week, what it actually encompass is basically an awareness, or rather, and also some sort of a deep dive towards the four topics that we have on reporting, which is on Bursa reporting, which will be covered by Rizaman, and also GRI, which will be covered by Pratap over here. And then we also have IFRS S1, S2, and also assurance that we're going to talk about during this 26 to 29. We'll be holding it in KLGCC from KLGCC on, like I said, on the 26th to 29th of January. So for those of you who may be interested, we are also offering a 20% registration discount, valid until this Friday. So if you are interested, please scan the QR code, or you can go to the link that we posted here, thefluoracademy.com/the reporting week, or you can just get in touch with any of us here or through our email. So, in the following days, tomorrow and also the day after tomorrow, we have, if you are interested to know more about the sessions, we have info sessions that is about 30 minutes for each session. So if you want to know about, the GRI reporting courses, and then also what it encompasses, we'll be having that from 10 to 10:30 tomorrow. And then for IFRS S1 and S2 reporting, the course on that will be 11 to 11:30 tomorrow. And then later on at 3, we'll be having one on sustainable reporting assurance, and also on the 9th of Jan, which will be on 11:30 a.m. I think some of you have registered to, I think, all of the info session, but if you haven't, you can go on to our website and then register yourself. So with that, I would like to close this webinar. Thank you again for everyone for joining our session. And thank you to Pratap and also Rizaman for graciously, becoming our first 2 panelists of the year. Hopefully there are more to come as well. And have a good evening, everyone. I hope you had a great session, and good night. Thank you so much.
Sorry, can we do a quick picture together?
Yes, a group picture. If you could actually just turn on your camera, and then we can do a quick group picture. I think our team will coordinate. Ikin, can you help to coordinate that? If you could get everyone to switch on their cameras for just a few seconds. Right. I think some of us are camera shy. Okay. Okay, I think let's just take a picture. Mikin, can you help to do the countdown for the picture taking?
Okay, yeah, I'll do. Okay. In 3, 2, 1. Cheese.
All right.
Okay.
Thank you so much, and Happy New Year again. Hope I wish that you have a great year ahead and a sustainable year ahead. Thank you so much. Bye-bye, everyone.